Hello and welcome. My name is Emily Shao, and I'm a current junior at the Rutgers Business School and the president of the RBS Blockchain Hub. I want to thank everyone for joining us today for this event in partnership with the Rutgers University Alumni Association and the Student Blockchain Hub. Before we start, I have a really quick deck. Chris, if you'd be able to share that with everyone. Okay, I think that it's loading. There it is. Great. Okay, if you could go to the next slide, please. All right, so I just wanted to talk a little bit about the Rutgers Blockchain Hub and what we do. So as you can see on the screen here, here are some of the opportunities that we provide to students. Student-led workshops. We have our developer subgroup every week, and we go over code line by line. There's blockchain 101s, research seminars. And every week we do put on a general event with speakers from corporate companies, startups, and nonprofits. So some of the companies that we've had in the past were Deloitte, Coinbase, Consensus, etc. We also do research opportunities, such as a blockchain COVID-19 tracking system that we put together last spring, a prototype on Hyperledger Fabric, and hackathon and conference travel events. Chris, if you could go to the next slide. Here, I just had to include a picture of a couple of the events that we've been on in the past. It's really incredible, all the resources and opportunities that Rutgers provides that enables us to go on these trips. And then I have one final slide here. I'm sure that most people in the audience already have a pretty solid understanding of blockchain and its general applications, but in case anybody is just getting introduced, here's a very high-level introduction. So blockchain is just an alternative to traditional centralized databases that establishes a tamper-proof record of transactions. It stores information in an open distributed ledger across a network of personal computers. And so no centralized person, bank, or financial middleman owns the system. Its authenticity can be verified by the entire community of users. And so it's very difficult for one person to take over the network or to corrupt it in any way. It stores a record of transactions, which can be anything of value, like money, goods, property, work, or even votes. And these transactions are stored in a chronological chain of blocks, which are linked by cryptography. And yeah, that's it for me as far as the slide deck goes. Just a little bit of housekeeping before we begin the event. All of the attendees have been placed on mute for the duration of this discussion, but if you have any questions, please send them via the Q&A option at any time during the presentation, and they'll be discussed at the end. Also, this event is being recorded and will be posted online after the event for the continued enjoyment and for those who were unable to make it today. And so without any further ado, today we have Chris Buren, a 2021 graduate of the Rutgers Business School, the former president of the Blockchain Hub, and a current quantitative finance graduate at RBS. So it's now my privilege to turn it over to Chris.
Thank you, Emily, for that great overview. And if our panelists, our distinguished alumni, can show their pictures, their great faces, that would be great. Tonight, we are honored to have with us three very distinguished alumni who I will introduce right now. Ken Arnold is a Cook alumnus and managing director of Everglades Global Advisors in Florida. David Bain is a School of Arts and Sciences and Rutgers Graduate School alumnus and creator of the world-renowned Veracoin and Verium cryptocurrencies. And finally, we have Hugh Leong, an engineering and alumnus and founder and CEO of OmniX Holdings. Thank you all for coming on tonight.
Welcome.
Great. So to hop right into things, can each of you give a brief background of who you are, why you're here, and when your journeys into crypto and blockchain began?
I guess I'll start, probably because I'm the oldest. So I run a few small hedge funds that specialize in cryptocurrencies. Back in 2011, somebody handed me the Bitcoin white paper, and I kind of read it, ignored it, thought, who needs a spreadsheet in the sky or in the cloud? And then a couple of years later, back in 2013, I reread it, started really digging into it. And I thought about old economist, Austrian economist, Friedrich Hayek, who wrote The Denationalization of Money, a book I read back in Rutgers in the old days. So I immersed myself into everything I could find about Bitcoin. And I started thinking in terms of macroeconomics and how many currencies in history have been debased or failed, and started thinking back to since 1990, 1900 should say, that the German marks in 1914 really were inflated away. $1 in 1914 US dollar turned into 4 trillion US dollars in 1923. Started thinking about the debt in the US, and I really immersed myself in it, built these funds, and just really started in 2013 on a journey to educate as many of my customers, friends, and clients that I could possibly do in this new space.
I'll go next. That's okay. So I was still in undergraduate when the Bitcoin white paper came out, and as a computer science student, I perused it and was like, this is a cool toy. Started playing around in the space. It wasn't worth anything. Nobody thought it was going to be worth anything. It was just a fun computer science toy. A couple of years later, I worked with one of my good friends to start up our own cryptocurrency. We saw a lot of problems in how Bitcoin worked, and we thought that maybe we could contribute and help out and create something that was even better. Off of that, I built a large number of crypto-related products, some mining pools, an SMS-based wallet, some trading arbitrage bots, and just have kind of been involved with it ever since. Recently, I was able to switch into it professionally. I've been a programmer my entire career, but now I'm finally at a company that works in that area. So that's kind of my story.
All right. Well, hello, everybody. To do David justice, we're not going in chronological order. He's not that old. I am definitely
look good for my age.
Yeah. Look, I graduated EE from engineering school in late 90s. And I was fortunate enough to kind of go through that whole wave of the internet and understand what technology, and particularly transformational technology, is about. And interestingly, my first job was with IBM Research, and I was doing public key encryption and figuring out how to get smart cards and personal identity into that for authentication purposes. So it's kind of come full circle. I was one of those guys that was really interested in business. So I basically ended up going to the business track. I was with a company that essentially built the largest institutional currency trading platform that eventually became part of State Street Bank and Trust, which is now the largest custodian bank in the world. And I spent 10 years at the custody bank in various different places, including a good stint in Hong Kong running parts of Asia. And around that 2013, 2014 timeframe, I think banks started to realize, well, there's a lot of fintech ideas coming in. And for a big bank, you need to know what's going on. So we ended up spinning up a unit called Emerging Technology Center to really look at anything that could have a long-term impact on a bank, right? AI, robo-advisors, enterprise blockchain. So I come back from Hong Kong to California again. I started this lab, and enterprise blockchain was one of these big things. And in the 2016, 2017 timeframe, when you're speaking to some of the largest pension funds and such, you hear questions in their voice asking, what is crypto? Is it a real asset class? What is blockchain to technology? How are they related or not? And a lot of this goes back to what we did in the currency space, creating an infrastructure. We realized that, or my partners and I realized that for crypto, and it will turn into a real asset class, as we all have seen now, you need an infrastructure to be able to let banks and hedge funds and such actually interact with crypto the way they do today with equities and bonds and whatever else. There is no infrastructure. So we left end of 2017, early 2018 to essentially create what we call an institutional platform to allow large institutions to interact with crypto. Very different than what Coinbase is creating as an exchange for retail. But our view is that large institutions will get into crypto for various different reasons, and they need a vehicle and a technology platform to be able to trade crypto assets the same way they do with other assets.
Great. Thank you all for your stories. Further along your point, Hugh, why should people care about blockchain, crypto, and this big trend of decentralization? What's the big deal?
Yeah, I'll start with that. I mean, look, these days with information around, when you hear something of this magnitude, that's the first reason why you should care, right? You need to understand what's going on. And with the internet, in hindsight, I think people should understand how technology can be really transformational. I think the important thing is, why is it transformational? And that's what we're trying to be here and talk to people about. And I think for crypto, there's two parts. There's the blockchain itself, the technology, how it can help large banks and intermediaries and remove some of the complexity. And then there is the value to the assets which you can invest. People invest in equity because they believe in the company, but obviously companies produce something. So I think here it's similar. Blockchain has a value to itself, but those assets that sit on the blockchain has a speculative concept and an investment concept. So you need to understand that as we're post-internet right now. So.
I also think, jumping in what you said, that you really have to understand the investment dynamics of it, because it's extremely volatile. You should never invest without doing a lot of due diligence, and put money in that you can't afford to lose, because there's thousands of cryptocurrencies out there, and most of them are very speculative. Although it is the road where you can diversify your assets, but you have to be very aware of the risk inherent with those assets.
Definitely. Ken, more along the investment management perspective, where do you see the value in coins like Bitcoin, Ethereum, and others?
Well, when we started investing in Bitcoin, we thought it would be sort of a solution. You have a fixed supply, an asset that can't really be debased. It's fungible, it's divisible, it's easily stored, easily transacted. So we saw it initially as it's an old line now, but as a digital gold. Gold has worked for 5,000 years in terms of debasement. Really post 1945, countries were really not, didn't really want to have inflationary times. We saw that a lot in the founding of our country. So I really saw Bitcoin later on other types of cryptos as a means of store for investors, where we could sort of escape should we see, inflationary times, not hyperinflation like we saw in, in the Weimar Republic in Germany in the late 1900s, 1924 to be exact. But, if we saw value started to go away in our currency, and now we have almost $29 trillion in US debt. And if you look back over 20 years ago, in 2000, we had less, we've taken on almost $24 trillion in debt. So we have to find a way for our customers, our asset base, to have a solution to grow assets sort of outside the traditional banking system.
So I'll add something to that too. Is how do you choose your investments? I mean, I think there's two things, right? Let's not just focus on the investments aspect of it, right? Blockchain does have a lot of technology value to it in many places where you don't need a centralized group of people telling you, for example, a bank telling you whether you have good credit or bad credit. You can have a decentralized platform, which is built on the blockchain. I mean, one of the values of the whole blockchain network, whichever network potentially it comes out to be, or many of them, is that it can remove something in the middle. If we all trust this decentralized online ledger to be the source of truth. But on the other side of it, it is investment, right? It's like when you invest in equities, you can choose technical analysis. I just see how this stock is doing up and down, and Tesla is blowing through the 52-week high and it's on a high trend. I just invest. I have no idea what Tesla does. But you can come back and say, well, it produces cars, and therefore the fundamental reason is that we want to save energy, and so on and so forth. So I think you can decouple how you want to invest. You can learn the technology and see this is really fundamentally changing. I'll invest in it, or not invest in it at all and just participate in the technology. Or you can say, hey, I want to put $20,000 to work, and I'll analyze these different companies and put into these tokens. So it's not mutually exclusive how you want to look at it.
Well put.
Yep. David, Hugh just mentioned that there is kind of this dual side between the investment asset management side of things, and then the structural technical side, if you will. What do you think the role of blockchain is in this new digital world that we're entering to?
Blockchain overall is kind of just a blanket term for An old problem, which is how do you get a bunch of people to agree on things, especially if you don't necessarily trust all of them. And that, as you know, I wouldn't say that's solved yet, but once it is solved, you know, it opens up a lot of opportunities. You know, you have places and countries where you can't trust the bank to store your money. You know, you have companies today where you can't necessarily trust them to store your data. You know, Facebook, you know, Google, you know, there's all sorts of scandals and things that go on with that. When you have decentralized, you know, systems, nobody can do that. You know, you control what's out there. Nobody can take that away from you, and you can prove it, you know, mathematically. You know, and that has a lot of value. You know, I can, you know, there's all these scams, you know, in the early days of crypto, you know, Mt. Gox and things, you know, with decentralized finance, that can't happen. You know, there is no person who owns all of the wallets and can steal all of your money. I can trade freely on some of these DeFi platforms. And because it's decentralized, you know, and trustless, I still own all of my coin. Nobody can steal it from me, you know, and that has value. You know, being able to do any kind of system like that is very, very powerful. You know, it's what the internet, you know, originally kind of enabled before it started kind of centralizing itself again.
David, and this is to any of our three panelists, you mentioned, and a lot of our fellow alumni on the call today also mentioned an interest in DeFi or decentralized finance. To anyone that wants the question, how would you define DeFi, and how does it differ from centralized finance or CeFi?
I'll go first, I guess. You know, in my perspective, DeFi versus centralized finance, you know, it's the same set of things: the ability to trade, the ability to do loans, the you know, all sorts of financial things, but without the backing bank. You know, when you work with a bank, you have to, you know, deposit your money into their bit, you know, and technically you own it and that's insured, but the bank owns your money. You know, when you trade with Fidelity, they're trading on your behalf, but they have your stock. With decentralized finance, you know, you can own your stock, you can own your money, and still have access to these tools. And that's kind of the big difference in my mind. If anybody would like to add to that.
Yeah, I think a lot of different definitions. I think that's a very good one. So I won't try to define it. You can go online and find these definitions, right? I'll touch on my view of which is better. That's the first thing people ask you: which is better, CeFi or DeFi? It's not mutually exclusive. I think that's what we need to understand here, right? If you are an individual and you decide to put $5,000 into the DeFi system and you loan that out, something happens and you lose your $5,000. You'll cry, you won't be happy with it, but ultimately it's your money that you lost, right? And what if it's a pension fund from your parents or your grandparents, hundreds of millions, if not billions of dollars? They put that big chunk into DeFi and the thing is gone. You lose your own keys, which we heard about, right? People who's, you know, throwing a hard drive away and they can't find it. Who owns up to that? If it's nobody, then we're all going to cry. So I think there are cases where on the institutional front, you have to have some fallback. And so far, at least, the biggest entity to fall back on is the government. But for individuals like us who want to be on the forefront of technology, I would like to have a choice, right? For some of my money, I want to park it somewhere else and earn yield and generate revenue some other way. And now I have that choice. So in that case, DeFi is great because I can seek out higher loans by using this technology and interact with it myself. But then, you know, personally, I don't think CeFi is going away. I don't think that's because just the background I come from. I think that's just, in my view, that's reality, right? Somebody's going to have to own up to the trillions of dollars in assets that's backed by somebody.
I also
I'd like to
think,
add-
to sort of jump on top of that, you know, DeFi is global, has low fees, you know, very few intermediaries, very few, you know, limited counterparty risk. And if you think about when I was back in May, when cryptocurrencies took a hard hit, was over $1 trillion wiped out in a matter of weeks. There was no banks that failed. There was no federal intervention. There was no emergency Fed meetings. It just fell. It was zero-sum game, so to speak, where assets were lost. People that were over-levered lost value, but it didn't change the financial system like we've seen in the past when some large hedge funds and banks have blown up, during the financial crisis. So we see the direct ownership, and we could see it with a smartphone 24/7, 365. We can see what's going on these blockchains. So it's an open system.
And one thing I wanted to just make more explicit, like the main difference between DeFi and centralized is the issue of trust. When you have that trust, you can, when you trust the credit card company to process transactions fairly, they can do thousands and thousands of transactions a second. If you don't trust them, you're left with Bitcoin, which does 10 transactions a second. But you have nobody that you need to trust. And that's the big trade-off. Is centralized is very, very powerful, it's very fast, it's very efficient. But it's built on the basis of trust. And DeFi is not. So if that's something you can give up, then it's very powerful.
I've been on various different panels where we just all agree. And I love panels when we maybe have some kind of controlled disagreement, right? So with DeFi, you still have to trust. I mean, the whole point, you got to trust somebody. You're decentralizing your trust model, right? You're not centralizing your trust model, but you're trusting somebody. What are you trusting? You're trusting the code. You're trusting somebody. You're trusting the group who formulated this thing. Now, we have no idea who created the Bitcoin blockchain, and now it's fully decentralized, right? Even the SEC says Bitcoin blockchain is fully decentralized. That's why it's a commodity and not a security. There's other ones out there, but whoever it is, whether it's Solana or some other coin, somebody wrote the code. And if you don't trust the code, then you don't have trust. But if you trust the blockchain, what you're inherently trusting is the code. And that's why, a few years ago when we were examining this at the bank, the joke was there's not going to be lawyers anymore, right? The lawyer is going to have to know code. It's engineers and lawyers rolled together. Now, when the code breaks and you've lost, and let's say you didn't lose your money, let's say there's $500 million locked in a protocol, how do you unlock it? Somebody's going to have to agree, and the developer is going to come out and change the code. And that's a consensus mechanism that is still going to be traditional. Somebody's going to have to figure out the code, and somebody's going to have to write the code. So it's not that trust has completely disappeared, I don't think.
Yes and no. The code for the code for Bitcoin is visible to everybody.
Correct.
And nobody can change it without everybody agreeing on it, or the majority of people agreeing on it.
Fair.
So it's not that I'm trusting the original developer. I can go look at the code. I can verify it myself. And I don't have to trust, the Bitcoin Foundation, which does a lot of development in the code, because if anybody else, sees them doing something incorrect, nobody has to run it.
Yep.
So yes, you do have to trust that the code works, but it's a lot easier for me to prove that the code will do what I think it will than it is for me to guarantee that Visa will do what I think it will. I can't go look at their code, and they could change things at any time, and I would have no way of knowing.
How many lines of code are in the original Bitcoin blockchain, saying that there'll only be 21 million coins outstanding at 2,140. And I'm not a coder, but I believe there's less than 10 lines, right? 5 lines of code?
The code that guarantees that there will be less than 21 million is like literally 5 lines of code. Yeah.
Right, 5 lines of code.
And some of those are brackets. It's
Right.
very minimal.
Right.
So it's come up in the past several minutes of discussion, and as well as earlier, this issue of trust. In the United States, we do have large and pretty structured institutions like the Fed and the government and everything, compared to other countries, third world countries, that maybe don't have institutions that are as strong. Someone mentioned it before that blockchain and Bitcoin in these countries can be very effective because people can trust in these distributed systems instead of these weaker institutions. Compare that to here in the United States. Does anyone here think that blockchain doesn't really have a place in the United States because we have strong institutions, or why not?
Just so I can understand your question, blockchain will have a place in a lot of different ways. I think what you're pointing to is, does blockchain have a place in the US to essentially define inflationary rules, right? So if you get El Salvador, that's essentially pegging their currency to the Bitcoin, like the way that the Hong Kong dollar is pegged to the US dollar. I don't know if that'll happen to the US anytime soon, because it, like you said, the US is essentially the largest government. There's a very strong Fed, however you think that their rules are now. I don't think we're going to change anytime. But does Bitcoin have a place in a lot of developing countries that does have rampant inflation and bad economics and policies? Absolutely. And we're seeing that happening already in South America and Eastern Europe. Yeah.
I mean, and we're already seeing it in some of the, there are some banks that are using, cryptocurrencies to do bank transfers because ACH transfers are terrible. There are, rumors that a number of companies are going to roll out, blockchain-based, stock exchanges, game selling, or secondary markets, all sorts of licenses. So, will it be as big a role, as in other countries? Maybe not, but there's going to be some role.
Also, that when you talk about access to your money, people have to know that Bitcoin's available 24/7, 365. So if you can move money anytime, anywhere, and have it confirmed within generally 10 minutes that the transaction's appropriate, and that's a real transaction. If you're somewhere on a weekend and you want to do a transaction, well, the banks are closed. So I think that's going to become more prevalent as the years go on. People get more comfortable with the apps, user interface, things of that nature.
Great. We have a submitted question more on the cryptocurrency side of things. How would each of you distinguish the different types of cryptocurrencies out there? For example, a Bitcoin or a Litecoin versus Ethereum or smart contracting coin versus a Doge or a Shiba Inu. How do you distinguish these different coins from each other?
We've in building a technology platform for various different institutions, we've seen some pretty clear use cases, right? There are those entities out there that just trade purely on technical purposes. So they're looking at liquidity, they're looking at trading patterns. They're basically, a lot of hedge funds are simply fitting their existing models for commodities, currencies, futures to the feed of crypto data, right? And you can get crypto data from Coinbase, from Gemini, from FTX, from anywhere you want, and even OTC providers that are one-on-one. So those are technical traders, I would think of it. The other ones are more fundamental traders, right? People that are looking at macroeconomics, right? Price to earning ratios, how many shares are outstanding. And I think a lot of large asset managers are still having some difficulty mapping traditional macro and fundamental analysis to crypto. And that's going to be expected for a while. I mean, the only way you can map real fundamental values like that is to see real usage, right? So Bitcoin, you can see how many transactions is sitting on top of it. Ethereum, you can see how many transactions. You can see all the other chains that are offering tokens off of the ERC standard. Other ones, the tiny ones, I mean, it's like your penny stocks, right? It's a crapshoot, right. Whatever you want, whoever you believe in. So all different kinds.
Well, I think Stanley Druckenmiller, one of the greatest investors of the last 30 years, said 5 years ago, Bitcoin was a problem looking for a solution. And, and he's stated publicly that he's involved because he's afraid of the inflationary trends we're starting to see in the United States. So yeah. I think, for anybody beginning, there's so much information out there available on the web regarding Bitcoin, that's sort of an easier story, at least as a novice, to begin learning, because there is a finite number of coins that'll ever be produced. And I think it's much easier to try to put a value to that and extrapolate it going forward, maybe even on a fundamental basis.
Definitely. I want to touch on something that has been in the news very recently and has very strong crypto and blockchain connections, the Metaverse. I think everyone has heard about Facebook rebranding themselves as Meta. Can one of you provide us your take on what is this metaverse and how can we use it or benefit from it?
That's for a younger one like David to answer.
Yeah,
I got nothing. I'm not a fan of Facebook, and I try not to use it and do not put my data on it as best as I can. So I personally will not be accessing the metaverse or finding much value in it.
Yeah, I mean, I'll throw something out there. I don't know exactly how much ties between the metaverse and blockchain and crypto will be there. Facebook obviously tried to get the Libra organization going,
right,
and they hit some roadblock with regulators, and they haven't really got that going. But the concept of having like an altered universe, it's been there either in story or in real life, sort of real life, right? Second Life was Linden Labs. Second Life was an independent virtual world that was created over a decade ago, and there was just not enough technology and momentum to get it going. And of course, metaverse looks like Matrix to me, so go for it, and then we'll see what the blockchain comes in.
As an investment manager, we really, we're looking for assets that can diversify our risk and possibly make us, extraordinary returns going forward. So we won't talk about individual equities because that's not appropriate, but I think that, David and you, we talked about, Web 3.0 and owning your own data. I think there'll be a lot of that going forward too.
Cool. Can any of you tell us any stories of your time in the space that you think were key to your interest in crypto and blockchain?
I'll throw one out there. And this has to do with institutional side. So it might bore some of you. But one of the transformational moments for me was speaking to a very large investment manager. And maybe some of the folks here, I'm sure Ken knows, Wellington over in Boston, right? They're multi-trillion-dollar asset manager. And we were talking to them, this was, I was still at the bank, about why they're interested. And the gentleman that was heading up their whole trading operation on the technology side said, we got to be ready when our investment team, their investment team, is looking into this. And I said, well, you're clearly not investing in crypto or blockchain right now. Why are you looking at this so eagerly? And this was actually, I think this person was an outlier, right, in seeing this so early. And his view was, he says, look, we might not understand it. We, as in like the older crowd, might not fully understand it, but the workforce is only getting younger. And the investment manager today, the next version of that investment manager is going to be, in their 20s right now, and 10 years later, they will be here and they grew up in this world. In order for us to have the technology capabilities to support those new ideas, I want to research on, who can provide us with this institutional trading infrastructure. That was one moment when I heard it. It says, yes, this is a number of years away, right? They're not going to openly talk about it, and you're not going to get them to quote it. But there are a lot of people who believe this kind of thing. And, I have kids that are in high school, and I can see how they're, very attracted to this, right? And they're not anarchists. So that was a really moment for me to see, okay, there's rational people who will believe that this will become a mainstream, even on the institutional side, and something I want to get involved with.
I think for me, it was back in 2013 and 14 timeframe when I started to I've had some very long relationships with some high net worth families that we run their money. And I started trying to explain to them what a Bitcoin was. I mean, it's a bit, it's not physical. So the stories developed where it was sort of almost like a joke. It's like a Seinfeld episode. You're buying nothing. And I have to explain this. And I went on this really journey from coast to coast in Florida, where we live, and then customers all around the country, and spent almost a year on the road explaining to them as we were building out this infrastructure to do it. And some people immediately got it, but I would say 90% of them did not. And it took a lot of education to get them where they wanted to invest even a little money. I wasn't really worried about raising money. It was more like explaining to them why we were interested in this. And that was, as I said, almost 8 years ago. So the stories that we heard, I actually built a spreadsheet of everybody I spoke to and what their comments were. So every once in a while, I look back at the comments that were made and I remind them, what we talked about 8 years ago. And that's been very enlightening to a lot of them.
So for me, I've never been that interested in the financial aspects of it, honestly. I think if it's very interesting as a technology. One of the things that really sold me on it was I had gone to a crypto conference in, I think it was Chicago, 2014, 2015, something like that. And I met some of the creators of some of these very interesting, currencies that were doing more than just being a currency. There was somebody who was doing protein folding, kind of like if you've heard of SETI at home or Fold at Home, it was distributing out the work of doing medical research to people, running this currency. The mining was doing physics simulations, and I thought that was amazing, taking this technology and doing something practical with it, doing something useful with it, instead of just burning through electricity. A lot of criticisms of Bitcoin, is that it burns a lot of electricity. Instead of just burning electricity doing nothing, they were doing useful things, helping the world be a better place, and that's kind of what sold me on the whole topic.
Very insightful. Thank you. We're going to wrap up this first segment of questions and then dive into some of our questions that we just received. But before that, a final note on this. Are there any last insights that any of you have that you would like to leave with your fellow alumni?
I'll go. I think that everybody who is an investor should spend more than an hour. We told our investors, put at least 10 hours worth of work into it to understand what it is, to understand that some of the arguments that have been made over the last 5 years are wrong, and at least educate yourself on it. There's been a lot of pushback, as you and David will tell you, in the financial community against it. But I would say there's a ton of resources out on the web. Read about it and at least learn it, because the younger generation, as you said, they're going to be using it. My kids use it. They're just out of grad school and they've been using it for years, and it's second nature.
Yeah, I think the learning aspect, it's not just this, right? It's not just anything. We should keep ourselves curious and read. And something as transformational as this, people have said that the internet is transformational because it democratized information. It's a free exchange of information. And blockchains, various different blockchains, not just a Bitcoin, right? Various different blockchain built on top of the internet is going to give us free exchange of value. And that's really, really powerful. So whether you are looking at this for investment purposes, or you're just looking at this to participate, you can join a company and participate and own 0 coin and still get upside and learn, right? So it is to go learn and read it and form your own opinions. And, we'll come back here a year later and have a heated debate about what we all learned.
Great. Now to go into some of the questions that were just asked. What do you all think of stable value crypto? Or I think this person is referring to stable coins. Are they legitimate, and what are they actually backed by?
I heard jump in on that. Stablecoin is interesting, right? I think Circle came out with sort of that, Tether came out with one of the first stablecoins. The one thing about stablecoin is that what you just said, Chris, right at the very end, what is it backed by, right? There was a lot of conversation around Tether and that, is it actually backed by real things? The whole point of stablecoin is that you have a crypto to fiat on-ramp that is essentially pegged one-to-one as much as possible, right? So that you can get in and out of this really easily without having to go through the banks and such. But the only way you can trust that it's one-to-one is if you can actually redeem it and the value is actually there. So I think stablecoin is hugely important for any kind of institution to really want to get on and off. But over time, who's the most powerful and most relevant future producer of a stablecoin? I think a central bank. there's a whole area of analysis way before crypto even that's called CBDC, central bank digital currency. And if a central government decides to tokenize its assets and put it on the blockchain, that is the biggest source of stable coin. So maybe the Fed will do it. Many other institutions from Europe, from Asia have all talked about it. So I think it's huge. For now, we have private stable coins, but in the future, I think my view is that over time, the central bank will fully digitize fiat currencies.
Additionally, there are some public stable coins. They're not as stable, but they're basically backed by other crypto assets, and they use that to back the value and guarantee that it has value. Obviously, with large fluctuations in the value of those crypto assets, they're not as well pegged as the private companies that theoretically have, the actual currency. But there are public ones that do exist.
Well, essentially, if you look at the stimulus packages that went around, you almost have the Treasury acting with a stable coin light, where they were depositing stimulus checks into individuals' accounts. So they had complete access to taxpayers' accounts. It was not a check that was mailed in most cases. So that's, in my opinion, sort of the beginning of the central bank stable coins here in the US.
Great. Do any of you have a view on where regulatory bodies such as the SEC will land in terms of regulating, investing, and managing cryptocurrencies?
Well, in terms of Bitcoin, 3 weeks ago, they approved the first Bitcoin ETF, even though it's futures based. It's not a product that we particularly care for, because it's not settled in the spot market or in the actual asset. But we believe eventually that'll lead to a spot market, Bitcoin ETF and others. I don't know what David and you think about that, but I think we all agree that they're evolving and they're trying to make it so investors are protected.
Yeah, at the bank, even post bank coming out as a private company, we've spoken to various different regulators, and there's just in the US alone, there's quite a few, right? There's the CFTC, there's the SEC, and FINRA, and all these different groups, depending on what they're regulating, and every country has their own. And I think, generally speaking, the governments have done a reasonable job at trying to regulate without completely stopping. I mean, if they, like we said this earlier, right? They could have stopped this. Well, first of all, I think they can put a decree there that says we're going to stop it. Can they actually stop it? Probably not, right? But you don't really want crypto to be sort of this underneath the cover thing, right? We want this thing to exist in the real world. And I think that there are under difficulties to, how do you regulate something that is so technologically advanced that, most lawyers and most regulators and most technologists can't fully explain? How do you let the central bank figure out how to handle that? So you got to give them some time. And I see it as maybe this is, just looking at the bright side, but the fact that they haven't completely ended this whole thing means that they're trying to figure out how to let it happen.
What are each of your takes on Bitcoin and other digital currencies being used as a method of transacting for malicious purposes, for illegal activities? And do you think that this will, in the long run, erode demand from regular good people for Bitcoin and other currencies?
Jump in on that one. I think Bitcoin in particular is kind of funny in that respect. Bitcoin has a public ledger. You can see where every single coin came from and when. It's actually really, really difficult to hide money transactions in Bitcoin. And there's lots of companies working on exposing exactly that kind of thing. I would say cryptocurrency in general, there are certainly ones around and there are changes that could be made that do make it harder, but it's easier to do something illegal with cash than it is to do something illegal with Bitcoin, like fundamentally. And to hide it. I mean, like, it's easy to do it with Bitcoin, but like now a record of you doing that is on the blockchain forever.
I mean, I'm a little disappointed that this actually keeps on coming up as a question, right? Because what the hell happened to the internet when it first came out? It's illicit activities, it's, pornography, it's the worst kind of things you can think about the internet. And yet it continued on, because for everything that you create with technology, you're going to have something bad. I mean, how the TV is screwing up kids' eyes, right? So all this stuff. So just saying that it means for something negative, is basically a scapegoating for people who fully don't understand the technology. So sure, I mean, I don't think we should deny that it has some negativity to it, but let's look at the overall benefits and how to minimize the negative side.
David, I think you answered this question in the chat, but I think it would be great if you could talk about it a little bit. It's my understanding that the price of cryptocurrencies is being manipulated by large players, what we know in the space as whales. And as such, ultimately, the little guy will get slaughtered. Is this correct or not correct?
I mean, I did answer a little bit, but I feel like for this level of financial, I'm probably not the best person to answer this one.
Well, it's very easy, and I'm not a technologist, you can go on to various websites and see how many wallets are out there, how many coins they own, and I think it's overstated personally.
Great. Any final questions for our panelists? You can drop them in the chat now. And while we're waiting for these questions, once again, thank you, David, Ken, and Hugh for joining us tonight and educating our fellow alumni on this great subject.
Welcome.
Yeah, there's a question there that's addressed to me that says, what do I mean by joining a company and learn? I mean exactly that. If you want to know more about crypto, you can invest in crypto by taking your money and throwing it into the market, or you can learn more about crypto by joining a company, right, that is involved in crypto. This could be a large bank that has a crypto project. It could be a startup. It could be an exchange that you know about. I mean, if you really love this stuff, you can make it your life, and earn cash, which maybe you convert to digital crypto right away.
Well, I'd like to add, and maybe I'm showing my age again, but I was investing customers' money when the internet really became, started, in terms of investing, and all the raises we saw of companies going public, to use point, in the 90s. And there were a lot of people that made a lot of money, a lot of companies that failed, a lot of companies that still exist today. And I specifically remember the first internet service provider was taken over by a Sprint telephone at the time. And at that point, I realized the internet service provider is not going away, because now they want them. So sort of the same thing in crypto is as people get more comfortable with it and understand it, these companies are going to get more and more active, to you and David's point.
Great. I see a lot of questions and comments in the question and answer section about references and what's the best way to learn about this new area. There are a lot of resources out there, but all of them are not as high quality as we would like them to be. So any suggested ways of learning more and good reputable places to go to learn more?
I think if you really know someone that is truly in this industry, whether it's in a traditional firm or a crypto firm or crypto exchange, I find it's probably better to have a direct interaction, a little bit more one-to-one than we have right now. But otherwise, I mean, information is so widespread on the internet, but the problem is, like any information now, you can't truly understand what it is, right? I think the technology part of it, if you really just want to know what crypto is, right? Some question about, is crypto quantum computing proof? I mean, you can search up that real technical stuff, but the value of crypto is a little bit hard to judge just purely on the internet itself. You just have to, I think, understand and formulate your own opinions.
Great. Someone is asking about, should they invest in cryptocurrency? Rather than asking if we should or we shouldn't, can anyone maybe explain some of the risks that come along with incorporating cryptocurrency as part of your portfolio?
Well, I'll certainly take that. The risks of investing in anything, anything can go to zero. Any company, any cryptocurrency, you have to know that going in. I mean, who thought that, you've seen companies fail in 2008, you never thought would fail. So it's always on a risk adjusted basis. But it's a lot safer now. I'm sure you and David will agree, back versus the days of buying on Mt. Gox. You can go into these public entities that will store your coins, so you don't have to worry about custody. They'll process your transactions from your bank. So it's a lot safer than it was 7-8 years ago. So if that's something somebody decides to do, you can, Coinbase is a public company. You mentioned Gemini. Those are two, pretty well-regulated companies in the United States that have good reputations that'll protect your assets. So I would, I know David's laughing because he wants decentralized. Stay away from that. But if you're beginning, you can't really start with a ledger and a tracer. Try to explain that right off the bat. So I think that's a good place to start. In terms of reading, I mean, there's so much information. There's 4 or 5 reports I keep up from cypherpunks that were original coders in Bitcoin. You can go onto their websites. Lop.net's a good resource. Jameson Lop's an original coder. I think those places are, they'll at least give you a basic understanding of what it's all about.
One thing to add is that, one of the comments was asking about resources that aren't, trying to, hawk a particular coin. And I'd like to point out that even those can be useful. If you're looking at what the value of cryptocurrencies are, look at when someone's being like, oh, why should I be in Ethereum? Why should I be in Bitcoin? They talk about specific things, how quickly they can operate, transactions, use cases, and just because they might be overhyping that particular coin, that is something that may be possible in other coins. That is a use case, that is interesting data. And just because you can't necessarily trust them to be objective, it's still interesting information that lets you kind of know what what's important in the space. Nobody's going to talk about something that nobody cares about. So, even by seeing what people are hyping, is interesting and useful data.
Yeah. One, just some random thought that came into my mind. One of the questions that we used to have all the time on various different panels like this is, what's a bearer asset? And it's been said many times, crypto, particularly Bitcoin, is a bearer asset, meaning that you actually have to hold on to it, right? Cash is a bearer asset, traditionally speaking. I think, when David's talking about being decentralized and having your own wallet, it literally is that, right? So if you're worried about storing $50,000 of $100 bills and put it underneath your mattress, and you're worried about that, well, then you probably should give it to some kind of central organization to help you take care of it, right? But if you do want to do it yourself, you don't have to have a literal wallet that'll hold, $50,000. You can have a USB drive, you can have all kinds of devices that actually can hold that on there for you and spend it whenever you want to. So in talking about participating and owning and holding, that's something to think about.
And as much as I've been, decentralized and all those things, I think centralized definitely has a place. And regulation is going to be something that's very difficult for a lot of decentralized systems to get around. Knowing, doing background checks, knowing your customer, Social Security and tax reporting, are all things that centralized can do much better. And that is much more regulatory friendly than decentralized things.
Well, I think it's evolved a lot since, where everything was decentralized. So as people learn, there's some technical expertise needed to move money around between wallets and things of that nature.
Awesome. One of our last questions here. Often when we see new emerging technologies come out, the nexus between two of these technologies can really display some really innovative and interesting applications. Does anyone care to speak about where they see AI or artificial intelligence or machine learning having a place in interacting with blockchain?
From a technology standpoint, they're kind of orthogonal. Especially with cryptocurrencies and blockchains, the whole point is that you can provably, you know exactly how it's going to behave. And with modern, with today's level of AI, it's very unpredictable and it's very hard to understand why it did certain things. You're going to see AI trading, AI, you're going to see AI in all the places you normally see AI. But I don't think it has any special interaction with blockchain. And if anything, I think it would be very hard to integrate them because you want crypto to be very predictable and very understandable, from a math point of view, not necessarily from a person point of view. And AI today is very much not those.
Yeah. We did take a look at this area at the bank when I was running the lab there. One of the interesting, even for AI, there's open AI, there's all different kind of groups, right? That is taking the notion of AI and providing open source code and community focused code to generate this learning algorithm. One of the things is, rather than plugging in crypto directly, one of the things about crypto and the blockchain is that you can imprint information, right? So it's open information, it's immutable information. Now you can feed this information you can feed this sort of trustworthy, immutable information into an AI system, maybe. But I think what Dave was trying to point to is that the AI will figure out, two different AI will interpret this information a little bit differently, right? But at least maybe you're shoving in the same data. So yeah, they're probably not directly related, but at some point they're going to all merge together.
Great. I think that is all the questions that we have right now. Thank you for our 3 distinguished panelists for joining tonight. It was a great conversation. I think all of our alumni here learned a lot. Emily, if you're still on the line, for any of our alumni that are interested in learning more about blockchain, are there any resources that the Rutgers Business School Blockchain Hub can provide? Okay, I don't think Emily's here right now, but I do know that if you look up RBS Blockchain Hub on LinkedIn, they put out weekly or bi-weekly reports and posts and articles about blockchain and its business applications. Once again, thank you for attending and hope you all learned a lot about blockchain and crypto. Have a good night.